Trump shocked as Canada cuts oil and triggers energy crisis in U.S. President Donald Trump's recent statements about Canadian oil have revealed a dramatic and contradictory shift in his approach to U.S. Canada energy relations. While Trump once dismissed Canadian oil imports as unnecessary, emphasizing American self-sufficiency and domestic oil production in states like Texas and North Dakota, he is now advocating for the reconstruction of the Keystone XL pipeline. This massive infrastructure project aims to transport up to 830,000 barrels of crude oil per day from Alberta's tar sands to U.S. refineries along the Gulf Coast. Trump's rhetoric has swung between harsh criticism of Canada and pragmatic calls for energy cooperation. At rallies, he often declared that the U.S. didn't need Canadian oil, promoting the narrative of American energy independence. However, his recent push for the Keystone XL pipeline reflects a recognition that the U.S. energy sector remains deeply interconnected with Canadian resources. His change of heart has sparked heated debates. Supporters of the Keystone XL project, including many Republican lawmakers and industry leaders, argue it would create thousands of jobs. Estimates ranging from 10,000 to 20,000 temporary construction positions, and strengthen North American energy security by reducing reliance on distant suppliers like Saudi Arabia and Venezuela. They highlight the strategic advantage of sourcing oil from a stable and friendly neighbor rather than from volatile regions overseas. However, environmental activists, indigenous groups, and progressive politicians strongly oppose the project. They cite significant risks, such as the potential for oil spills along the pipeline's 1,200-mile route, which traverses sensitive ecosystems like Nebraska's sandhills and the Ogallala Aquifer, a vital water reservoir for agriculture and drinking supplies in the Midwest. Furthermore, extracting oil from Alberta's tar sands is known to be carbon-intensive, generating up to 81% more greenhouse gas emissions than conventional crude oil. An alarming fact for climate scientists and advocates pushing for renewable energy. Adding to the complexity, logistical and regulatory hurdles loom large. TC Energy, the original developer of Keystone XL, officially terminated the project in June 2021 after President Joe Biden revoked its permit on his first day in office. Since then, the company has dismantled much of the existing infrastructure and shifted focus toward renewable energy projects. Reviving the project would require new permits, environmental reviews, and billions of dollars in capital investment, making the prospect a daunting gamble for any company. The situation has become more complicated with Trump's recent announcement of a 25% tariff on imports from Canada and Mexico, effective March 3, 2025. Although energy products will face a reduced 10% tariff. This move acknowledges Canada's critical role in the U.S. oil and gas supply chain. Canada, under Prime Minister Justin Trudeau, has vowed to retaliate with counter-tariffs, targeting approximately 155 billion Canadian dollars worth of U.S. goods. These countermeasures will unfold in two phases, beginning with tariffs on agricultural products, consumer goods, and industrial materials, before expanding to include the automotive, aerospace, and defense industries. Canada is also considering export restrictions on essential minerals such as lithium, nickel, and cobalt, resources critical for manufacturing electric vehicle batteries. Limiting exports of these minerals could significantly impact U.S. industries already struggling with supply chain disruptions. The tension reached new heights during a recent meeting between Trump and French President Emmanuel Macron. Trump confirmed his intention to move forward with the tariffs, framing them as part of his broader America First economic agenda. Meanwhile, Trudeau has pledged to protect Canadian interests, emphasizing the nation's readiness to act decisively against U.S. economic pressure. Trump's rhetoric has grown increasingly confrontational. His repeated suggestion that Canada should become the 51st state of the United States has further aggravated the situation. On his Truth Social platform, Trump argued that the U.S. heavily subsidizes Canada and that the nation would be better off as part of America, enjoying lower taxes and greater military protection. Despite his claims of American energy independence, the U.S. continues to rely heavily on Canadian resources. Canada supplies over 4 million barrels of crude oil daily to the U.S., accounting for more than 60% of America's total oil imports. Trump's mixed messages suggest he sees Canada not as an equal partner, but as a subordinate nation to be controlled and exploited, a perspective that has angered Canadian leaders and citizens alike. Furthermore, the escalating trade war has severely impacted North American markets. Stock prices for Canadian exporters have plummeted, while U.S. manufacturers brace for higher costs. In response, Canada's retaliatory tariffs are expected to disrupt cross-border trade worth over $2 billion daily. Canadian officials have stated that the tariffs will remain in place until U.S. restrictions are lifted, emphasizing their determination to defend their economic interests. The retaliatory tariffs are being implemented in two distinct phases. The first phase targets approximately 30 billion Canadian dollars worth of American imports, focusing on agricultural products, consumer goods, and industrial materials. The second phase, scheduled for March 25, 2025, following a public consultation period, will impose additional tariffs worth around 125 billion Canadian dollars, aimed at the American automotive, aerospace, and defense industries. Additionally, Canada is considering further actions, including imposing restrictions on the export of critical minerals essential for manufacturing electric vehicle batteries. This move could cause significant disruptions to U.S. industries already grappling with supply chain challenges. Economic analysts predict that prolonged tensions could lead to increased costs for American consumers and drive innovation in alternative energy sources. Another critical factor is the growing international pressure to transition toward cleaner energy. Environmental advocates worldwide have criticized the U.S. and Canada for their continued investment in fossil fuels, urging both nations to commit more seriously to green energy solutions. As global demand for electric vehicles, wind, and solar power increases, the two countries' approach to energy cooperation and competition will significantly impact their economic and political relationship. In summary, the evolving U.S. Canada energy conflict highlights the deep interdependence between the two nations. While Trump's rhetoric suggests a desire for dominance, the reality of North American energy security is far more complex. Canada remains a critical partner in supplying vital resources to the U.S., and any disruption in this relationship could have far-reaching consequences for both nations.